Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And my name's Seth Crustman here with Ben Brayshawn, Dan Mickelin. How are you guys doing today?
I am Christmased out.
Yeah. I was about to say enjoying the Christmas season, but that would have been a lie. So I'm more in line with you there, Ben.
Well, I'm definitely not. I still haven't received your gift.
The Lexus is on the way, right?
I did send you guys a gift.
That's true.
I did.
That's true.
I did have to check that box.
We still got a couple days left, Seth. We'll work on this.
Well, we hope that you are enjoying this season and past Christmas, heading into New Year's, and 2023 is just about a wrap. And it's just been a ton of fun here for us at Money on Tap. I'll speak for myself. I've had a lot of fun, you guys. I really enjoy doing this show with the two of you. I just love the listeners. I love the feedback. I love the opportunity to just share, I think, is some better financial planning. You know, getting people educated, getting people topics, getting you guys your feedback on different points of views that we have on how we've been successful helping people navigate the financial landscape. So with that, it's a lot of fun to kind of get a wrap going on for our 2023 season and giving people helping them navigate the financial terrain for 2024, you know, sharing our insights and our strategies.
Yeah, I think you're dead on. I'm actually excited because I think, you know, with this show, we're going to lay out some really good groundwork, but I think we're going to give some answers to how to mitigate and address concerns of the market going down, things people can do. Stick around to the end of the show. This is going to be, it's some insightful news, some new stuff for you, because the polarization we've talked about, what's being predicted about this coming year is just, it's complicated. Don't take my word for it. Go on any internet source out there and read the wildly optimistic and the wildly doom and gloom stories and get your own feel about the complexity of that space. And this show, I think you're going to find that there are things you can do separate from just, kind of basic standard investment strategy and work that you should be doing that can help mitigate that concern and fear.
Yeah, I think if we look back at what going into 23 looked like, I mean, first of all, we had this recession that was absolutely happening. The markets were going to continue their bear run from 2022, and none of it ended up happening. We had a great year in the market. Recession never came. So,
Hasn't come.
That's true. So I think part of the point of what we're going to get into with the
I will
show,
be right, Dan.
Someday. So it's inevitable. Someday.
It's 100%. Absolutely. Yeah, 100%. That market's going to tank.
It will. It certainly will.
Yeah.
But, one of the points we're going to hit on later is just be informed, right? There's you can find any opinion you're looking for out there. They truly are all out there. And particularly this year, with the forecasting being, as we talked about, so polarized. I mean, there's nobody predicting single digits in either direction. Everything is either 20% up or 20% down.
Oh, yeah.
So it's one of those years.
Well, I have heard 12. I've heard like
12.
Yeah.
Nothing under 10.
Oh, yeah, nothing under 10. No, we're not doing 5.
Yeah.
Oh, man. It's just absolutely. I don't know about you guys. I wonder what the end of 2024 is going to be like. Yeah, remember when they were predicting it was going to be like up 30%? It was up 60, or it was going to be down 20. It was down 50.
Hey, that's next show that we get to pull out those predictions, and we'll do a look back and we'll hold each other accountable.
Yeah. But the thing is that it's really hard, and I think for some people it's just like, well, might as well go one direction or the other because it's just not looking. It's going to be an interesting year. I mean, the election. I mean, by the end of 2024, our heads are going to be spinning. There's going to be a lot going on. I'm sure this year is going to be crazy busy.
We hope that we're able to help you out here with navigating the financial terrain of 2024. There's just going to be a ton of stuff baked into this show. And with that, we got to get going because it's time for Money in the News.
First up from CNBC, Social Security rule for beneficiaries who keep working is poorly understood, report finds. And thank you, Lori Konish, for this article. And this is true. There's an aspect of receiving Social Security, particularly for early filers, people who file before retirement age, full retirement age, that there's a certain earnings test out there. So if you continue to work while you collect, there is a pullback that Social Security is going to apply to your Social Security income amount based upon those earnings. And that changes every year. But in 2023, it was $21,240. So if you earned over that while you were collecting Social Security, the Social Security reduced your benefit by $1 for every $2 earned. And that number is going to change in 2024. It's going to bump up to $22,320 of allowable income before any of this math comes into focus for you. But truly getting your arms around the fact that this rule exists, how it affects you personally, and what happens down the line as kind of a payback for everything that was reduced from your benefits received is really important. It's an important concept to understand, and particularly for us in the planning world, it's something that we have to coach people through all the time. And it's, as the article states, it's generally not understood, or at least not understood well.
Yeah, I mean, it's like, what happens to that? If you're still working, you're under full retirement age, you're under 66 currently or 67, and you decide to take that money. What happens to that dollar they take back? Why are they robbing me blind? I mean, what's this tax I'm getting? The Social Security tax, as people refer to it. I guess it was probably a decade ago or so. I don't know, maybe a little longer, that I realized, how they did the math on the return of those funds. So you still get the money. It's just kind of like, hey, listen, you don't get it all today. And I think that's really interesting that even though you retired early and they take some of that money back, it all works itself out when you hit full retirement age. So it's really not lost for forever, like people think. And I think that's really the piece that is really misunderstood. Now, how that impacts what that number is going to be at full retirement age obviously depends on, how much you're making, because they're withholding more and more and more, so, but it's, there's a point in time where you might as well just let the rest of your Social Security grow. And that's what people are talking about. It's like, hey, at some point in time, you just might as well let it sit there because it's going to grow on top of itself. So, yeah, this is a really misunderstood taxable scenario or considered taxable scenario by Social Security, but you really do get the money no matter what.
Really cool that we're getting that opportunity out there. If you do not completely understand that rule, that's part of the financial planning process, is take into account like what your goals, what your plans are, and how that is going to work out in your financial planning or retirement scenario. Good to know. The United States is producing more oil than any other country in history. Matt Egan gives us this article from CNN. Thank you very much. Well, guess what? As the world right now is grappling with this existential crisis of climate change, environmental activists want President Joe Biden to phase out the oil industry. And, Republicans argue that he's already doing that. Meanwhile, basically, we've got this other data here that supports that the United States is set to produce a global record of 13.3 million barrels per day of crude. And that is right after 13.2 that was hit in the last month? That was in 2020, just before the COVID crisis hit. So it's interesting to get an article like this coming across our desk because it's so contrary to what you might be thinking out there as far as what's happening in oil and how much the pressure has actually from, green energy, et cetera, been, trying to suppress the production of oil, and actually what the capacity is of the U.S. to be a major producer out there, because most of the time we hear about, Venezuela or Saudi Arabia or you name it, right? There's major players in the oil industries out there and that are producing. That's not typical for us to come full circle and understand, guess what? We in the U.S. have the capacity to have some major output.
A couple of things that were surprising about the article, but this one line really caught my attention.
I'm going to have fun with this one, Dan. I'm waiting.
Well,
I'm waiting with bated breath.
Not sure it's the one that you think it is, but the United States actually Let me get it right.
Hurry up, Dan. I'm chomping on the bit over here.
Choose your words wisely.
America is exporting the same amount of crude that Saudi Arabia or Russia produces. So we are not only producing enough for our own consumption, but then we have enough excess to export as much as they actually produce. And I thought Saudi Arabia, honestly, was the global leading producer. I thought that. And clearly it's way off.
Well, when I think of this article, Dan, that means absolutely nothing to me. When I read this article, I'm like, the United States is set to produce a global record of $13.3 million barrels per day of crude. And who's the president?
Biden.
Oh, Biden. Wait. Oh, wait. And then over here in the article, it says that's just above Donald Trump's era record of 13.1 million barrels. So, I mean, if you're a green energy lover, you should be voting Trump because he's producing less oil. I don't know how else to interpret that. That's crazy. I mean, if you're voting for Biden, I mean, you're just asking for our planet to die. I mean, you don't love the little children.
That's it. Every time I see Trump, that's what I think. Ecologist. This guy is just so green. It's unbelievable.
Oh, my word. Okay, next up. This hot new tech job pays $300,000 a year. What's an AI prompt engineer? This is by Alex Mitchell. Okay. Alex is with the New York Post. What an interesting article. I mean, this is all about people who have to learn. They're figuring out how to speak to the AI computer software to be able to get the optimal output for what you're looking for from the AI machine. I mean, shouldn't AI be good enough to figure out that you're an idiot and can't speak to it? I mean, that's what I'm thinking AI should know. Be like, hey, this guy's the dumb one, so I got to do a little extra work. But I thought this was pretty interesting. The biggest issue that they have is that they're trying to the article goes into this huge thing about computer science and the idea of the data scientist was like the 21st, sexiest, quote unquote, sexiest job of the 21st century. And that this data scientist was like, that was where you're supposed to go. But now they're saying, no. It is the AI engineer prompter that is the person you want to be, because honestly, it's going to make you $300,000 a year to be able to speak to an AI software in a way that will create the greatest outcome you can possibly have. Truly interesting, but the biggest problem they're having is telling people what that degree looks like. They don't even know how to say, you need to know how to do all these things. Are you an artist? Are you a scientist? What is the right person? Again, no one knows what AI is going to do or amount to, so they're not even sure themselves what they need.
Yeah, so it's like anything else in IT, right? Garbage in, garbage out, right? So you have to ask AI the question exactly the way it wants to be asked to produce for you the optimal outcome that you're looking for. And this apparently is a role, right? We have AI translators now. People that, you sit down, you tell them your problem, what is he looking for, and they know how to craft the question for AI.
Panama Canal is running out of water. What do I do? Nuke
an iceberg. That's
it. Yeah, the article goes on to, I think kind of maybe illuminate is not the right word, but it's what I'm going to go with. It's basically giving some career advice here from the AI industry leaders that warn that several kinds of workers could be displaced, and those could be computer programmers and coders and journalists and software engineers, data analysts, paralegals, and legal assistants were among some of the people that should be concerned around AI and what AI could accomplish. It kind of got dropped in there. Like I was like, where did that come from?
Who told them that? The AI machine or somebody else?
Yeah, right? Yeah. Oh, that's a scary thought. I didn't even think about that. The AI machine is sending out a shot across the bow there.
You're all going to lose your jobs.
What I did think was in line with the article was where they just kind of gave you an identification of like a data scientist, once dubbed the sexiest job in the 21st century. I missed that one in school, and earns a cool $137,000 a year on average per New York per built in New York City, who gives us that data. So a good prompt engineer is more expensive than a data scientist today. And what they're having a really hard time finding is anybody that really actually has the experience to be qualified. Like you're not going to find somebody that's got 5 years of experience to be able to do this job. Even at most, it might be 3 years. So who are these people? I'm wondering what their transition. They probably are the software engineers.
I mean, if you're looking for a job, you can probably go back to school and get it. And
I can probably go on to Instagram right now, download something, and qualify myself to be one of these people. See ya. You guys, this has been a fun start to a wrap up for us here at Money on Tap. That's if you're just checking in with us now, if you're listening to us via radio, that's what we're doing here at Money on Tap. We're still currently employed as financial planners. We'll see at the end of the year how that goes, but still continuing to do that at Brayshaw Financial Group and bringing you Money on Tap. And in the meantime, while you're flipping through that Instagram, head over to your podcast app. Would you please search Money on Tap and subscribe? Give us a review there. It helps us out at Money on Tap to continue to spread Money on Tap out there to our listeners and keep growing this. And we just want to be able to help support you and your financial vision, become a successful investor, be successful in retirement. And with that, we're going to take a quick break. And when we come back, yes, it is our final show of 2023, and we're navigating the financial terrain of 2024, giving you the insights and the strategies. Don't go anywhere. We'll be right back. Hey, this is Seth Cressman with Brayshaw Financial Group. Are you looking for a hassle-free way to invest? Look no further than Brayshaw Financial Group. With Brayshaw Financial Group, you can start investing with as little as $100 and enjoy a user-friendly platform with diverse ranges of investment options. Visit Brayshaw Financial Group and start your investment journey today. Brayshaw Financial Group, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are bringing you back again to, navigating the financial terrain of 2024. If you are new to Money on Tap, hey, we want to welcome you. If you're just dropping in on the radio, yes, please take a moment and grab your phone and subscribe to Money on Tap on the podcast venue of your choice. And we appreciate it. That way you can go ahead and make us a part of 2024 and just incorporate us in your financial learning, whatever you're doing to improve your success in investing, success in retirement. That's our focus here for you. And it helps us out. When you subscribe, when you go ahead and leave us a couple of stars, whatever you think you want to leave as far as a recommendation there for others or to dissuade others from listening, hey, that might be you as well. We've got those too. We're fine either way. We appreciate you just spending a moment with us to go ahead and drop those in there. And we're going to bring you the best of what we have left for 2024. This is going to be a wrap for the that's what I mean. The best of what's left for 2023, leading us into 2024, because this is our last show for 2023. And we're really excited about what we have in store here for you. Last week, we just want to give you a little bit of a recap here. What did we cover? Well, we went into, the interest rate hikes, what we think the Fed might possibly do, what could happen if the Fed actually does increase interest rates, or if they pivot and turn, as well as, kind of the bigger picture, if the war in Russia and Ukraine ends, all the way through to what we see happening in terms of, oil, gas, you name it, the commodities. There's two sides of this coin where people are possibly in gold and going to hunker down and go to cash mode, or maybe they're looking at the 2024 and seeing a real opportunity here for themselves. There's data to support both of those, and we're just trying to, first of all, let you know we get it. We're here as financial planners, and we're looking at this environment, and we're being prepared, and we're preparing you as our clients or our listeners for what to look forward to and different things that you can start to do to prepare yourself if no matter what camp you're in here. With that, I think it's time for us to start diving in with, understanding. First of all, want to just take some time to understand different kinds of assets. Okay, what is this for you? So understanding a role of alternative assets for one. That's the one I think we want to kind of focus on here first, and how that plays into a diversified portfolio. Okay, so as I'm saying this, I'm realizing we just did a show on alternative assets. So number one, go ahead and we're going to double check that box of listening to Money on Tap and going back and listening to our alternative asset show to get caught up on how this plays a role for you and in understanding this asset class. So data from Bank of America shows that 75% of investors from 21 to 42 really don't think it's possible to get above average returns by just investing into the market, equities and bonds. So 80% of that group is now opting for alternative assets, alternative investments. And this is a very, very large group out there for those of you who are unfamiliar with what it even means in terms of alternative assets. So with that, I think it's important to just pay attention and try to understand more of that, because it's not necessarily a given that an alternative asset is going to be successful.
It's certainly a high risk environment, but the returns have been there, and the faith in it as an asset class is growing. And I think that's the interesting part, because as more people find their way to participating in that asset class, they're just simply going to drive up the value of it, right? More investment's going to flow in, and those investments that have been made will rise, in tune with that. And alternative assets, like you mentioned, Seth, on our show we did previously, I mean, there's all kinds of stuff in there, whether it's collectibles and cars and really things that, sneakers is an example that comes to mind. That's you just never would have thought this is an investable item, right? Sneakers, you just wear them, right? But the reality is this younger age group is investing in those things with real returns. I mean, it's a legitimate market. But there are kind of more typical, kind of better known alternative asset classes like precious metals. And we've made reference to gold here a number of times as kind of a flight to safety type of a investment. But there are other metals used in, particularly in shipbuilding that are, a little bit more risky in their fluctuations, but it's a commodity we need, and this global economy is just going to continue to mine and produce these metals, and it's just a part of everything we do these days. Computers operate absolutely everything, and it takes a lot of these metals to build that.
Yeah, I would say, if I told my dad I was investing in sneakers, he'd probably kick me in the pants with his. It's just not the same world it used to be. But, precious metals do hold a place, and whether it's gold. Gold's important, but you've got, silver and copper are, huge technology plays. And, if you think that's where the tech world's going to continue to rise and the drive is there, some of the silver and copper mining is a potentially great opportunity. You just never know. We don't have the allocations there, but, if you want to take high risk and you want to get into the alternative space, you're right, Dan. There's all sorts of precious metals. Most of the time I talk to people and they say, I really think I should get some gold. I usually start diving into why, what is it about gold? And then it really comes into a kind of like, end times, gloom and doom, global loss, whatever. And at that point in time, I say, well, don't go buy the gold ETF, or whatever. Go buy coins, because that's really what you're asking for. So understand what kind of alternative investments you have. Like, some of that wealth, the wealth that's portable, is really great. Like, I know a lot of people who invest in artwork and, antique cars and things like that. And that stuff has its value. And in a healthy economy and a good place, like, that's great. But precious metals, they're mobile, and, if you've got a flight to safety, that's something you can take with you. You're not carrying a huge painting off your, great room wall with you in the back of your convertible, if you're running for safety. Maybe you would be, but at that point in time, you really have to know. When you look at like World War II, when the Nazis were taking over lots of the wealthy Jewish homes, all the paintings were there. They were all confiscated because of that. That was all part of that artwork scenario. So you think about that stuff. Why do you want the alternative investment? Is it an allocation to your portfolio and a wealth creation, or is it a flight to safety issue? And I think when you start determining that really brings some value to it. Next up, we're going to talk about real estate. There's a couple things in the real estate space that you have to really be aware of. And first of all, real estate is obviously a great diversification tool, but it is also a very high risk diversification tool. And a lot of people don't think of the duplex or the triplex or the small little office space that they own or whatever as a high risk scenario. But, with these interest rate hikes that we've seen, we're facing one of the biggest real estate issues potentially out there. I was talking to one real estate salesperson I know, and we were chatting about some different things. And he said, he goes, I went to go meet with this real estate economist, and we were talking about different things. And he thinks that the next couple of years are actually going to be pretty good. But then he said, if we have another 10, 15, 20% increase year, we're going to see a major, major hit to the real estate market. And that's really concerning. And I think we can't be naive enough to think that these interest rate hikes aren't going to affect the real estate market at some point. There is going to be a tilt to that seesaw. There is going to be some pullback on some of this stuff because the rise is so fast, so great, so huge. Seth, what are your thoughts on that?
Yeah, actually, I was just talking with Kira. Kira's my wife and my better half, and she's a commercial realtor. And it's just dinner table conversation that we love to have. And what are the opportunities, and what are what are some of the challenges or headwinds in this industry? So, the multifamily is an industry, as well as the industrial, that has been bought up. So just as any other asset class, as money flows in, the prices increase, and eventually they get at a level where they're expensive. And then there's a period of time where that cools off and it slows. But overall, it's been bought up, and it's with the interest rates rising, as well as that's a challenge to support that kind of real estate. So it's overbought. The other opportunities are the office space, as well as the like retail in those areas. So those are areas where the opportunities to buy are available because, well, office space for one, because people have been working at home so much and have transferred out of office, but what they're realizing is that they're just not as effective at working from home as they were in these office spaces. So there's going to be opportunity there, as well as the conversion from those office space into residential. There just isn't the workers to be able to, the plumbers, the electricians, and the people that are required to create that infrastructure there. Not that the buildings wouldn't support it, it's just that the workers aren't available. So that's another space that we encourage people, if they're not really going into or wanting to spend money on a 4-year liberal arts degree, have something more substantial that they can go ahead and start creating an income for themselves in those areas of the trades. So those are the opportunities and that are coming down the road.
I was talking to one person about some real estate, because we own some of our office buildings where we're located geographically coast to coast. So we don't own them all, but we own some of them. And was looking at one location, and I was talking to somebody. I was like, well, this would be definitely a stop by kind of situation and so forth in this area. And I was like, what do you have like under $1 million? Like, what's out there? Like, what's the demographic look like? 13 properties. 13. 13 commercial properties. Like, that included every warehouse, anything that wasn't someone's home. It was 13 properties. So I was like, oh, that's interesting. I was like, that's not much. So when you start really thinking about how much of this stuff is just really kind of, bought up and just consumed, I mean, at some point in time, there's going to be some sort of change, and that's driving some of these prices up, and that's crazy.
And one of the things
what asset? What was that again, Ben? What asset was that in real estate?
Anything commercial, anything like industrial, commercial, you name it.
Industrial, everything, even multifamily.
Under $1 million.
Wow, under $1 million.
No, not multifamily, but
not multifamily. Okay,
yeah.
All right,
yeah.
All right.
Yeah, I was just going to say the one thing I found interesting that we covered in the show a little while back as well is this kind of fight back in a lot of local communities against the Airbnb world and the short-term rentals, right? So a lot of people have gobbled up properties with the intention of Airbnb in it, right?
Yeah.
Turn it into a revenue stream. be mindful of that and really understand the community you're buying into well and how open they are to that, because laws are changing and they're changing quickly, where that might become a burden for you because you simply won't be able to rent it the way you thought you could.
Well, that's interesting you say that, because I know a couple areas that have done that. They've grandfathered the people who owned it who were doing it, but they couldn't do it after they sold it. Like if they sold to somebody new, it no longer would have to be, they would have to reapply and so forth, which depleted the value of the property. So now it's not liquid. Right now you're selling a house versus a rental income program, which is worth a lot more. And I think there's some lawsuits coming on that, because I really don't think that that's even legal on some level, but that's crazy. Next up, we have for you AI, artificial intelligence. We chatted briefly about this earlier in the show last week, and Seth's giving me the nod. We will come back to that.
Hey, you're listening to Money on Tap. You can reach us at 855-226-8551. And when we get back, yes, we're going to get into AI, such a hot topic from 2023, and it's still going to be a leader for us in 2024 and understanding more. Gosh, we are so full of great little pitchy slogans today, you guys. We should probably record these more often. Anyways, with that, you can sit tight when we get back. And we'll get more into our what's in store for you in 2024, how to be a better investor. Don't go anywhere. We'll be right back. You're listening to Money on Tap.
Hello, everyone. This is Dan Mickelon of Brayshaw Financial Group. Are you looking for professional guidance to kickstart your investing journey? Look no further. Brayshaw Financial Advisors are here to help. Our team of experts will provide you personalized advice tailored to your financial goals. Visit us at BrayshawFinancial.com today and schedule your free consultation. Brayshaw Financial, investing made easy.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And today we are getting into this wrap up of 2023 for you, giving you some guidance in the 2024 season, what to look forward to. And kind of we've got a compilation or a list here of what we think is important for you to look into designing your life around your portfolio, your retirement. All factors are important. One of the most important ones I want to bring to the table is you making a commitment to improve or increase your financial vocabulary, your financial understanding, or whatever it is that you're looking to increase and grow in. Make Money on Tap a part of that this year. Subscribe to Money on Tap podcast, and then you can go back and have a listen to your pick of the litter, whatever it is that's important to you to learn about and bring forward and just make it a part of your year. We thank you for that. It helps us out here. We appreciate that as well. And with that, we're going to jump back in to this show.
You know, Seth, one other thing too for the, as we're kind of entering 2024, and I know we mentioned it before, but we're getting into tax season, and one of the things that, if you're thinking about doing your taxes, trying to figure out how to get your taxes done, a lot of our clients like to use people we have relationships with. We have relationships right here in the office and so forth. Makes it really great. But if you're not doing business with us necessarily, you're welcome to use those services. Great guys, great capabilities, and actually quite reasonably priced from what I understand. So, feel free to reach out to us at 855-226-8551. Schedule a meeting with one of our tax preparers or CPAs, and that might be a good move for you guys. But yeah, Seth, to jump back into the show, we were talking about AI a minute ago, and boy, what a quandary AI is, right? I should ask AI what AI is. But everyone's probably heard of ChatGPT and all of these different pieces. And the real conversation about the portfolio and whether AI is an allocation for you or not, I think where we're all standing as financial planners, as investment advisors, the way we see this is this AI space is going to have an impact. It's going to have a massive impact on everything from, what pops up on your cell phone to, the sales stuff and Instagram, all these things. Apple's building their own AI. Google's building their own AI. There's C3 AI, which is a traded one. There's a few of those. But I heard that if you mention the word AI in New York City, people will send you money. I mean, it's like literally all these private equity venture capital firms are looking for that. What we do know is we don't have a clue what AI is going to look like yet. People use it in small ways, doing, certain great things with it that are very interesting, but the empowerment of the business world has barely been touched in just marketing alone. But it's pretty phenomenal. But I don't, how this actually plays into someone's portfolio and how to do this. This is definitely a wait and see. Is AI for me?
Yeah,
I had a great experience the other day when I was at church, and one of the pastors was asking me about another financial planner that was making a recommendation on a publicly traded company for the AI bent and what I thought about it. And I'll just say it was exactly what we've talked about here on the show. It's like, well, in the public arena, there's not a whole lot that you have available in that AI space to be just trading, right? It's kind of the big tech names doing what they're doing, the chip manufacturers doing what they're doing. Those were the AI plays that were, a year ago. And today, we've seen that work out, but specifically inside of that direct AI niche, those are more the privately held offerings that you're just not going to have access to. And when I was having that conversation, one of the engineers from Intel jumped in and completely just smashed the idea that there was any publicly traded company that has access to AI right now that's a trade to make, and that it was all privately held equity and stuff. That it was anyways. It just completely substantiated what we've had as far as a conversation on Money on Tap. And it's such a vast world that how much time does it take for us to dig into the companies that we're holding, to do the research that we're doing, and then to kind of onboard a whole other dimension of technology to really dig through those private spaces. That's a tough one. There's just so much out there, and that's why a lot of the money out there is just like, what you got AI, we're throwing you money. Let's see what works, and because they don't have the time to dig into that either.
Yeah, I think that the real money to be had in the AI space isn't going to be necessarily, not that these won't be profitable, but it's not the AI producer themselves. It's what industries are they going to enhance and drive down cost and create efficiencies inside of? And those are the companies you want to get invested in, right? So where do you think AI is going to matter the most in manufacturing, in medical? Where's that impact going to most likely be felt and play those companies?
Well, that's the thing. No one knows how to forecast,
Right.
To even speculate. We're in an infancy stage, as I mentioned. Like, this is just something that's just starting out. We talked about an article earlier in Money in the News, and there's just so much. They don't even know who to hire to maximize the current AI space, right? I mean, that's all part of the problem. I mean, they don't even know. To advise on AI, I think it's a wait and see. I mean, because there's going to be a space for this. There will be, but just buying random AI assets or stocks or companies you can forecast, you're taking a huge risk, and I wouldn't recommend that.
The next thing for 2024 to keep an eye on and in mind too is make informed decisions. And I think that really dovetails nicely off the back of this AI story. Right?
You're welcome, Dan.
Yes, thanks. Nice setup there, Ben. You don't just hear a rumor or somebody's got a stock tip at the water cooler and just jump right into it, right? There's lots of tears and lost money associated with that type of an investment philosophy. And I would always recommend working with a professional, but that's not the only way to do it. If you don't want to engage an advisor or utilize our services here, there's just a ton of good information in the public forum that you can access and use to fuel those decisions and give you a sense of direction about where you should get invested. So I urge everybody to participate in these markets, but do so from a perspective of real knowledge, of understanding, and give yourself the best opportunity to find success in 24.
One of the things I love about 2024 is that we're walking into a year where people can put money into just a high yield savings account. And if we were to walk back like 5 years, we would just say you're crushing it. You are crushing it in that high yield savings account. And with that, there's lots of other opportunities inside of that space to save, I like there's a lot because the cash savers that we work with, we want an opportunity for them to have returns inside of those money markets, the bond portfolios, those. There's just lots of different places that you can save with those kinds of consistent returns, just churning it out. And those high yield savings accounts is a great way to do it. And the FDIC can insure those. And one of the other programs that we love to offer here is with our high net worth clients is we have a substantial savings program that allows FDIC insurance up to $5 million. And there's just a way that we're able to do that here with layering with different banks. And to get you those, put CDs inside of those and put FDIC insurance on the wrapper around all of those for you as well. So super cool that we can do that inside of 2024 looking forward. And one of the other things I like about that too is that there's the opportunistic person who's really waiting for those special investment opportunities, whether that's a real estate or whether that's a, separate kind of an opportunity to come along, or even what a lot of people have been 20% of the people out there have been preaching about is an incredible decline in our, not only the economy, but our market, to give us just opportunities inside of the equity world as well.
Yeah, I like the idea of high yield savings. It's been a long time coming. I think there's opportunity there. Again, not a proponent that the Fed's going to lower rates. I mean, Dan and I were meeting with somebody today. I'm concerned. Panama, shipping half as many goods through the canal this coming year. What happens? I mean, all of a sudden you got half as much going through there. You got half as much sold. Guess what? You got just as many people want to buy. So what does that cause? Inflation. And then all of a sudden maybe the Fed's raising rates again. I have no idea. But high yield savings, it's about time to have the ability to build a safety net that can grow for you, that's fully liquid, that's available. Don't discount a good savings account. You only appreciate this when it's gone. So take advantage of it now, because it's hard to make money sometimes. I'm going to jump over to, guys, the investment side on the eco-friendly. I mean, I think I'm probably the right person to do it because I'm probably the most pessimistic. But that being said,
Amen to that.
Yeah, I know, exactly. Hey, listen, if it's going to be bad and it's better than that, then that's the worst story you're going to hear, right? So, when it comes to eco-friendly fuels, I mean, I hope they work. But, I think about our money in the news earlier and talking about the U.S. producing the most oil, barrels per oil per day than anybody in history. I kind of laugh because the point is, well, are we really becoming eco-friendly with all the infrastructure we're outlaying each and every day, but yet we are still using more and more oil every day, which is evidenced just by our own consumption. And by the way, we're not energy independent, folks. So what does that mean? So I really don't think we understand, and I think there's a lot of falsehoods in what's eco-friendly. But I am a proponent of clean energy. Like, who isn't a proponent of clean energy? But I don't want to make the world dirtier, and I don't want to use more oil in a facade if we're really not making eco-friendly, So some of that stuff concerns me. But I think looking for these options and opportunities is definitely part of our future, because every government person is talking about it. Every presidential candidate is talking about it. Every state is considering, electric-only cars or hybrid-only cars. I mean, this is in every facet of your future. So at some point in time, an investment allocation here is going to be relevant for someone's portfolio. How, where, why? Are you buying GM? I have no idea. Are you buying, some future solar panel car company that doesn't exist yet? I have no idea. But this concept of creating energy from the ocean, from wind farms, from solar, all these things, this is going to be a player in our future.
Yeah, I think the administration just mandated, for any federal employee that needs to rent a car, it has to be an EV. I think that some decree was just issued from high on top here that, that there's this mandate to use electric vehicles.
DC people are going to be stranded everywhere.
Right. They'll never get where they're going. But it's probably a good thing. Maybe that works out for everybody. But I think back to the point where we kind of opened the conversation around ETFs and this eco-friendly investment opportunities and the ESG funds that were a hot topic a while back, and all these faith-based funds and ETFs that exist, and there's alternative investment ETFs. So, part of that.
And that sounds like a whole heck of a lot for someone to consume.
Yeah, I mean, there's
a lot.
There's so much out there that, and they've become so creative and so narrow and specified that if there is something that you believe in, or some certain cause or movement or future energy source, you can find a way to invest in it. You really, truly can.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are getting into navigating the financial terrain of 2024, our insights, our strategies for you. And when we come back, there's going to be more for you. And our wrap up, what have we really done here in 2023 with you at Money on Tap? We appreciate you being here with us, and thank you so much for the people that are on the radio right now that have stopped their car or taken a minute to go over to their phone and subscribe to Money on Tap. Leave us a review. That helps us out here. We appreciate you for doing that. We'll be right back with more of navigating the financial terrain of 2024.
Are you looking for personalized guidance to kickstart your investing journey? Look no further. Brayshaw Financial Group and our planners are here to help. Our team of experts will provide personalized advice tailored to your financial goals. Visit BrayshawFinancial.com today to schedule your free consultation. Brayshaw Financial, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Yes, it is our final show of the year, and we're having a lot of fun here navigating the financial terrain of 2024. Got our glass balls out here, and we've been giving you some tips, some tricks, some insights, some strategies that you can incorporate in your financial planning this next year. And with that, you know what? We've got a lot to cover with a little bit of time here, so let's go.
Well, I think I'll just jump in, guys. So, one of the things we talked about was portfolio balance and risk tolerance. I mean, I think those are kind of like two key main points to make sure that we drive home today with you guys. Balancing your portfolio takes a lot of expertise. I mean, and I think that's probably one of the things that most average investors, kind of doing it yourself kind of person, doesn't really understand true portfolio balance. And that does take a talent. It does take discipline. And it does take the ability to tell yourself, I shouldn't really reach that hard sometimes. People push their portfolios too hard and then they get burned hard. And that's why, in 2008, when the market was down 30 some odd percent, people were losing half or 60% of their money because they weren't properly balanced. That is a big issue. And then the second thing runs right into it is your risk tolerance. Are you absorbing too much risk? We have a tool, and I would encourage people as your New Year's resolution, go to our website, either go to yourmoneyontap.com or go to BrayshawFinancial.com and go to our risk management tool. It's totally free. You literally just put in your email address. The worst case scenario is you're going to get a welcome email from us that says, hey, do you want any help? So it's like no big deal. No one's going to bother you. Type in the actual assets you have, like the actual stocks you have. And we don't need account numbers. Just type it all in. It will tell you what your risk score is. And it will also ask you enough questions for it to figure out what your risk score is personally based on your own personal objectives. And you can, by a third party, see what our industry says your risk score is and what your actual personality score is for risk. And it's totally free. Just do it. It's super simple. Make that your year-end resolution or beginning New Year resolution, whatever it is. Go try it. BrayshawFinancial.com, yourmoneyontap.com. Go do it. It's good.
Yeah, as far as balancing a portfolio goes, I mean, this was a prime example this year. I mean, 23's been stellar if you're in the NASDAQ, right? It's up 40 some odd percent. But the other indices aren't anywhere near that. So this is a prime opportunity to take a look at what you're holding and maybe do that rebalance if you don't think that tech and AI is going to be the story in 24 and continue carrying forward, which I'd be in agreement on.
Yeah.
Yeah, the majority of people's assets are, as we know, in 401ks. And one of the things that we find is that very few people actually go and either auto rebalance that or even have a balanced approach on those portfolios. Usually just use a target date fund or something that gets auto selected for them. And then what happens is you have a 2008 or, which is frankly a healthy, natural thing inside of the market to shed the overweight in terms of how overbought it is. So that happens, and then somebody pays attention to where their portfolio is and says, "Oh my gosh!" and fear sets in, and they sell, and then they don't come back in a timely manner to go ahead and capture those gains. It's just the way the numbers work. It's what people do. And you can prevent that in this story right here, using what Ben said and going and using the risk management tool that we have so that you're appropriately allocated inside whatever you are investing in, whether that's your 401k, your IRA, your Roth, your non-qualified, you name it. That's important, especially if you really are, not really studying or a student of the market and buying some individual assets, like, say you're buying Apple or you're buying whatever the story is that you want to buy. And that, hey, I've got a ton of Apple stock, but I know why I'm holding that right now, and that's why I'm overweighted in that. And I'm going to be in that story till, the next 20 years because this. So that's just not your typical story out there. We want to make sure that people stay invested. And that's a really critical point for you. No matter where you're at in this journey, is stay invested and use tools like the money markets or the saving strategies that we talked about to keep invested.
Finally, let's close the show out, guys, with a couple things here. We talked about this on the last show. We're going to bring it up again, but being mindful of a looming recession. We talked about how 9 months after a substantial rate increase of doubling, which we've done way more than that in the last year. 9 months later, there's been some sort of recessionary event. And that's a very scary thing. And I think, that's why there's that polarized, hey, the market's going to do great. And then there's this other polarization of the doom and gloom. And there's nothing really in the middle. And that's a very scary thing because there's a lot of history that tells us this year should be good. But there's a lot of history that says, hey, listen, everything else is bad. So, and we know that there's competing factors on each of those items, and it's an election year, and it's this and it's that. So there's a lot going on with that. So how do you mitigate that? That's the question. That's the $1 million question we're going to answer right now. When you want to get into the market, you need to use in a market space like this fundamental and technical analysis that helps you get in and out of the market in crisis moments in the stock market. We use that. We actually use that technology, whether it's 50-day, 200-day, whatever the moving averages are. It tells us to get out of certain indices at certain times to reduce risk. That is the hope that you get. It's not guaranteed. It's not this, but statistically, historically, it has worked many, many, many out of the hundreds of times it's happened. So we use those types of processes to help mitigate risk, especially in times where there's lots of question. And when there is lots of question, guess what? The market even moves harder and sharper because everyone thinks exactly what they forecasted is going to happen. So that can potentially be self-predicting, at that point. So we use a lot of fundamental and technical analysis. If you're interested in that, I would encourage you to give us a call, because if you're thinking that that's probably appropriate for you this year in your portfolio because you can't afford to lose, 20 or 30% of your market value in a bad year right before retirement, that's the time to give us a call, because those are the types of things that you might be able to do. There's also other tools that you can use, and hopefully none of that happens. And if that doesn't happen, the worst case scenario is that maybe you paid a little bit more, maybe you took a lower rate of return and a less risky investment, whatever it was, but it got you to where you need to go. You're still going to make money. That's what someone always told me. It's like, it doesn't matter as long as you're moving forward. And that's the hope.
It has been a wonderful year for us here at Money on Tap and Brayshaw Financial Group. We want to thank you, the new listener, the listener that's been there with us since the beginning, which it's been a long time here at Money on Tap, since 2016 that we've been bringing this to you. It's just a pleasure for us to be here with you and to get the feedback and the correspondence and the new clients too, as well as the old clients that just continue to bring questions to us and needs and concerns that you have. And that gives us an opportunity to create shows and content for you that's valuable. Thank you so much for 2023, our Money on Tap listeners. We care about you, we love you, and we cannot wait to be more in 24.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.